I mean, we've had about a month now of better data on the economy. We got a good payroll number recently. We got good housing starts, good auto sales, and now the broad retail sales report. You know, it'd been a big mystery to economists why retail sales had been so weak in recent months, and this kind of takes us a step closer to where I think we should be. The U.S. consumer hasn't forgotten how to shop. The market should not be fearing the Fed right now. The Fed is only hiking in the context of better data. This number moves them a step closer to hiking, but they need to see consistent, steady, better data. This is a low inflation, better growth period we think ahead. So the stock market shouldn't be afraid of a Fed rate hike, particularly if it comes in the context of better growth.
I'm still interested in Greece, although the sense that Merkel wants a deal and she's going to make sure they get one, that's what gave us that big short covering rally yesterday, and it continues into today. Most of those rebound rallies are not one-day affairs. They tend to last 2 to 3 days. So we should be in reasonably good shape. I'd like to see the volume build a little bit. We were not very far ahead of the 50-day moving average. And if you're going to be up 200 and some odd points, you really want to see the volume and validity.
A lot of what they're doing right now is dealing with the bad decisions of the past on the ratings. The ratings were too high. And now all those agencies are changing their methodologies to reflect the withdrawal of expected government support. So they really are doing what they should have done, arguably, 4 or 5 years ago. So I don't think that this is a reflection of banks getting weaker. If anything, if you look at credit metrics of key European and US banks, they are strongest they've been in decades. If you look at capital ratios are much higher because of much tougher regulation. What is correct, however, is that if things go bad, a lot of mechanisms are being put in place to protect taxpayers from future losses and pushing those losses on bondholders, which sounds about fair to me.